Welcome back to Market on Close. I'm Caroline Woods in for Oliver Rennick. Just about 9 minutes left in the trading day, and it's time for the big picture. Let's welcome in the team from Charles Schwab. Joe Mazzola is head of trading derivatives. He's the head trading derivatives strategist at Charles Schwab, and Michelle Gibley is director of international research at Charles Schwab. Michelle, Joe, great to have you both here with us. Michelle, let's start with you. We were talking about the potential for tariffs, 25% on both Mexico and Canada as soon as tomorrow. There are some reports that weren't happening. The White House said they are. Tell us what you know and what we should be prepared for here.
Yeah, it's been an interesting day. We had, as you mentioned earlier, reports that it was being delayed from February 1st, which is tomorrow, to March 1st, and then later that was refuted. But we take these tariff threats seriously, but we do believe that they are a negotiating tool. The surprise may actually be in how quickly they come and go. And the reason we say this is prior experience. We saw this just last weekend with the country of Colombia. The tariff was threatened and then removed in a day's time. In May of 2019, Trump announced a 5% tariff on Mexico to take place in 10 days, with the rate to escalate by 5% a month and reach 25% in 5 months. However, that tariff never took effect after Mexico agreed to measures to stem the tide of migration into the U.S. So, we believe that tariffs are likely to rise, but perhaps by less than threatened. And they're unlikely to be across the board on all imports. There could be exemptions. We don't know how much the tariff will be announced tomorrow, but there could be a difference between what's announced and then what is implemented. So here we're really going to have to pay attention to the details. It takes time for customs to implement the change, and the announcement could actually leave time for negotiations to take place in coming days. So I know we had market volatility today, but investors might want to take a longer-term view and not try to trade every announcement.
Well, Joe, talk to us about how investors should be preparing for potential tariff risk, because even if we get some clarity tomorrow about Canada and Mexico, it's not over here, right? We still have China to worry about. So what should investors be doing to prepare for some of that risk?
You can do what I did today, and that's rip up my notes from this morning because things kind of turned a little quickly. We only have one sector up today, and that's communications, and that's kind of barely holding on. And you could definitely look at Meta as the one stock that's kind of carrying that group. So it's interesting. I think you were talking with the previous guest about the fact we're only 1.5% away from an all-time high. I mean, it just feels toppy. I think that's the biggest issue. I don't think nobody's calling to run for the hills by any means, but I think what we need to do and what we've seen, and I think this is important, what we've seen investors do, if there's been a rotation out of some of these higher beta names. I mean, if you look at what's happened basically since the beginning of the month, since January, investment technology sector is basically flat. You've seen strength in the other sectors. You've seen the equal weight S&P 500 outperform the market cap weighted S&P 500, and the Mag 7s just, to be honest with you, they've lagged. They haven't done very well. So you're starting to see that already. It seems like investors are looking for other ways to kind of allocate funds that might be a little bit less sensitive to what we're hearing from the tariff story.
Yeah, so I mean, Meg 7, although Meta, Amazon, Alphabet still have had a pretty impressive run, but yeah, the overall tech sector lower to start the year. So I guess, do you expect to continue to see that broadening out? Can the market continue to rally if we don't see as much big tech participation, Joe?
That's what's interesting is not only have we seen the broadening, but if you like something like an advanced decline up until like maybe this last hour or so, it was 2-to-1 on the S&P 500 coming into like I said this afternoon. So basically, what that's showing you is that there is money that's moving into the S&P 500. It just happens to be moving into other sectors that maybe weren't in vogue in 2024 and 2023, when it was really just that bifurcated trade. You stay in tech, and then everything else is kind of underperforming. We're seeing that rotation right now, and it'll be interesting to see kind of how that continues. Because earnings have been good, and even if you take tech out of the earnings, you've seen strong financials. Industrials have been okay, but healthcare has been one of those sectors that's really outperformed. And once again, it's another sector where we're seeing money rotate into.
Yeah, material is up pretty substantially as well. So, Michelle, some broadening out, some diversifying maybe of portfolios here in the U.S., but you also make the case that international stocks, speaking of diversifying, are actually outperforming U.S. stocks. Is that a trend you think will continue? Because I feel like every year we talk about the potential for maybe international stocks to finally have their moment.
Yeah, I think people might be surprised that international is outperforming. They may not be surprised that expectations are super low. Pessimism is pervasive, and it might already be reflected in the stocks. We have the MSCI EMU index, that's the European Monetary Union, trading at a 40% discount to the S&P 500. And remember that for stocks, better or worse matters more than good or bad. And recent economic data in Europe has been surprising to the upside. And, you know, it was just mentioned the sectors. The three biggest sectors in the EFA index are financials, industrials, and healthcare. And that represents half of the index, and they're outperforming this year. If we look at the stock 600 bank index, it's at a 15-year high. You know, investors might be underweight after a long time of international underperforming. It might be a time to take a look.
All right. Well, we'll keep an eye on that, and then we'll also keep an eye out for Amazon and Alphabet earnings next week to see if that changes the narrative at all. Michelle Gibley, Jill Mazzola, thank you both so much.